You guys basically came out and said, look, doesn't matter what the Fed does here. We're going to make a decision that if the 2 years, 20 basis points, we're not going to go buy a 30-year bond at 1.5%, which is what SVB did, what First Republic did.
Right.
So how do all these really smart risk management people, how does the Fed, you got these people that are brilliant economists. How do so many people get this wrong? I mean, rates were zero. We had our investment committee meetings and we're like, all right, rates are zero. They're going to go up. Right. They have one place to go. How do so many people get that call wrong?
I think when you look at the interest rate cycle and the behavior of rates over the very long term, we've been in this secular decline for a very long time. I mean, decades. And it's been a huge tailwind for the bond market broadly. But I also think it looks different than what you see on the equity side. So you tend to see cycles, value outperforms growth, growth outperforms value. I know some people are saying value will never do that again, but there tends to be cycles and behavior that are shorter term, almost a full market cycle being somewhat defined as a 7-year period. In the bond market, you don't have that cyclical element to how rates behave. And a lot of times people are pointing to very structural reasons why rates are where they are, demographics, economic growth and the long-term expectations for economic growth, productivity, and those types of things, which aren't subject, again, to those cyclical factors in the same way. And so I think as people looked at those long-term factors and thought about inflation being dead, which had some rationale for it, because after the GFC, if we can recall, so many people said, as the Fed does moves like this and floods the market with liquidity, we're going to have massive amounts of inflation. And it didn't really happen. And so I think people thought that was a problem of yesteryear, and that duration was always going to prove a hedge. You're going to get that nice offset with equities. And as long as inflation isn't a concern, rates aren't a concern, and fixed income is going to be very well behaved. And so I think that just became part of the psyche. And in fact, it was really painful to bet against duration for the period after the GFC up through the COVID crisis. You didn't want to take that bet because you lost money on it. So I think that was more what was in the psyche than any sort of shorter term call.